You've lived under a rock from 2015 to 2024, and then you woke up, you'd find that the payment industry in India is just multiplied 100 times. 10 years ago, I would say that only 1 million merchants were accepting payments. Today, that number is closer to 20 times or 25 times.
Wow, that's phenomenal.
Bajaj Finance was essentially very interesting for me because it's not very common to find NBFCs build payment businesses. And the 2 or 3 questions that we wanted to answer through payments is that can payments actually drive more velocity for lending products? You know, the app has over nearly 80 million customers. On the payment side, we've got close to 40 million customers. We are now hitting run rates of about 9 crore transactions on a monthly basis.
Wow.
I think first thing that people need to think about is how can they be different?
Yeah.
You want to do the same thing as the largest payment companies in the country, it's very difficult.
Hello everybody and welcome to yet another episode of PayU's Let's Talk Scale. This is a show where we feature companies that have scaled in extremely tough industries. The objective of this show is to inspire the next generation of entrepreneurs, professionals that may want to scale their companies both in India and outside of it. Today, we have with us a professional called Nitish Asthana, who is the president of payments of Bajaj Finserv. How are you doing, Nitish?
Very well. How are you?
Good. Bajaj Finserv is a brand that needs absolutely no introduction. Everybody in India knows of your brand. It's one of those companies that have scaled brilliantly through these years. Tell us a little about your journey in the payments space and at Bajaj Finserv.
Look, I came into payments pretty much by accident, if you ask me. I was literally enjoying a nice sabbatical after having worked for about 15 years in banking and insurance, and I was trying to figure out what to do next.
Yeah.
And I landed at one of the largest payment companies in the world. I spent about 8 years there running businesses in India as well as in Asia. And interestingly, that was a time when payment companies could actually make money. And if you've lived under a rock from 2015 to 2024, about 9 years, and then you woke up, you'd find that the payment industry in India has just multiplied 100 times. And a lot has changed. But then I spent some time at an Indian Fintech as well. Bajaj Finance was essentially very interesting for me because it's not very common to find NBFCs build payment businesses.
Yeah.
It has its roots in the company really wanting to go digital, and you know they launched an app which is progressively becoming a super app.
Yeah.
And the 2 or 3 questions that we wanted to answer through payments is that can payments actually drive more velocity for lending products as consumers come onto the app? Number 1. Number 2, can payments actually capture more of the commerce that is happening at the franchise stores of the company? And third is, can payments make lending operations very efficient? So it's a very unique opportunity, and I thought like several other moves that I've made, which may not be very obvious, I thought I'll do this one, but it's been very exciting so far.
Got it. Everybody in India knows Bajaj Finserv. Tell us a little about Bajaj Pay.
Okay, Bajaj Pay is essentially the payments brand for Bajaj Finance. And it's essentially got 2 aspects to it. One side is the consumer aspect, which powers consumer payments, and they could be across UPI payments or bill payments or wallets, FASTag related products. That's one side. And those are products which are all available inside the Bajaj Finserv app, which is for consumers. The other side of it is all merchant payments. Given that we operate with a large merchant base where lending products are offered to consumers who walk in, we also launched merchant solutions which included simple QR codes, the humble QR code through which you can make a UPI payment inside the store, moving on to soundboxes, moving on to point of sale devices, and the technology which is within that. So Bajaj Pay essentially works across these 2. We also have an in-house payment gateway that powers all the online payments which consumers are making into the company.
Got it.
So essentially, it's a consumer merchant as well as a sort of a company platform to drive payments.
Got it. As you scaled Bajaj Finserv's payments ecosystem, how has consumer adoption of EMIs and digital payment models evolved?
I think it's changed positively and dramatically.
Yeah.
You know, I think some of the thesis that we had that can payments actually drive more velocity for consumers is coming through. You know, the app has over nearly 80 million customers. On the payment side, we've got close to 40 million customers. So that's a scale that we are reasonably happy about. We are now hitting run rates of about 9 crore transactions on a monthly basis.
Wow.
An equivalent, you know, value, GMV, whatever you call it. Payments actually contributes to close to 30 to 32% of MAU, which is how many users actually use the app and how many of them actually go to payment properties on a monthly basis.
Yeah.
So 30 to 32% there. We scaled to about 1 million merchants or thereabouts, about 400,000 merchants with soundboxes. Some of the businesses are early stage, and you know, this is really a 10-year view, and we're just, I would say, getting started. Kind of happy with the progress so far in terms of scale, but I have to say, no business is without its pivots, and I would say that we've actually pivoted 2 or 3 times in the 5 businesses that we run. But staying true to the 3 questions that I actually said in the beginning, right? Can we drive velocity for consumers? Can we capture more of the commerce? And third, can we make the company more efficient with payments?
Got it. Very interesting. Bajaj Finserv is one of those huge success stories in India as far as scale is concerned. How have you leveraged technology and analytics and even AI for that matter now to bring about that scale?
We actually structured Bajaj Pay as a SBU. It's a strategic business unit. You can kind of think of it as a company within a company. Because you know, you've got the largest NBFC, which is very busy and very focused on to delivering, you know, credit and lending to consumers across the country. Now, the SBU was built to actually create specialization, and it was built to create quicker time to market. So the SBU is essentially not just business teams, but it has business. Very core component is a technology team which is purely for payments, the operations and service units, compliance units, the HR units, the risk management. All of this is like a company within a company.
Got it.
And why we did that is because digital businesses are all about technology, right? People know Bajaj Finserv to be great in terms of technology adoption. In terms of offline businesses, this business is purely technology, right?
Yeah.
Over time, what we have followed is a principle that anything which is consumer facing or merchant facing is something that has to be in-house.
Got it.
So our technology teams build the front-end apps or the front-end skins that actually consumers or merchants use.
Yeah.
But then to get the best of the core technology, because it's a very deep technology at the back, we partner extensively.
Got it.
But we partner with a few like-minded companies, PayU being a prime example, to actually deliver the core services at scale, because it's all about, you know, digital and resilience.
Got it. In the space that you are in, trust becomes an extremely important component. What in specific that you do that really builds that trust and confidence in your customers?
I think if we look at payments and the scale at which the industry operates, some of these trust and risk related problems are actually industry wide.
Yeah.
Because as more adoption happens, the risks also emerge, right?
Yeah.
So the way I see it, consumer payments has risks which are related to spoofing, which are related to social engineering, phishing, related to cyber threats, loss of data, fraudulent behavior from both consumer side as well as merchants and all of that. We are a regulated entity, so even though Bajaj Pay is an SBU, but the company is regulated by RBI, and so there are a few things that we follow. Number one is, I I think we got to start with the compliance first culture, right? Compliance first culture is more around saying that, look, compliance is not contrary to innovation. It actually enables you to drive innovation at scale and still create trust,
Yeah.
right? Second point is governance. Governance is super important. I mean, you can have compliance in form, but in spirit, you got to have the right attention to trust and security for consumers.
Yeah.
And that then goes from dedicated teams that manage it, then it goes into steering committees, which we have an IT steering committee, which kind of manages and monitors how we're doing there, goes into board subcommittees, and then goes right up to the board.
Got it.
The third piece is really about monitoring and making sure that we've got, control mechanisms in place to monitor, to intervene and proactively prevent, right? Threats which happen. But look, I also think that in a way, threats keep evolving. You can plug one and somebody will innovate on another side.
Yeah.
So you have to keep working to keep pace, stay one step ahead. We do a lot of ethical hacking.
Yeah.
We engage people who actually replicate what fraudsters might be thinking and how they must be doing, because fraudsters have also become, I would say, very sophisticated in their approach, right? So it's a little bit of preventive, it's a little bit of proactive, and a lot more of hard work.
Nitish, how did you build a seamless payment ecosystem in tier 2 and tier 3 cities in India?
Everything that you look at this country, we
Yeah.
are different,
Yeah.
and we probably have different behaviors in different markets.
Yeah.
I've always said that we as a company, we are operating across 4,000 geographies in the country, right?
Yeah.
Whenever we talk about payments or we talk about financial services, we believe that we can add significant value. This is something that should be interesting as we build the country's payment ecosystem going forward, right? I'll give you examples. I mean, someone in the 3,000 city is taking a loan, and we do fairly digital processes to onboard that customer. But the person who's talking to the consumer is actually on the ground.
Yeah.
Right? So it's not purely digital. It's you can
There's a
think of
physical
it as
and
a
digital.
physical and digital, combination in some ways. So we then encourage consumers to come onto the app, and as they come onto the app, we encourage them to set up, let's say, a loan repayment mandate using UPI.
Yeah.
So it becomes digital in a way.
Got it.
And then we encourage them to use the payment options as they come into the app. Let's take credit cards, for example. Credit cards, I would think the market is not material beyond the top 40 cities. It's really UPI and maybe, similar payment options which exist in those areas. So if you look at merchant acceptance, like I said, if you're living under a rock for 10 years, right? 10 years ago, I would say that only 1 million merchants were accepting payments. Today, that number is closer to 20 times or 25 times that.
Wow, that's phenomenal.
And that has only happened because it is democratized through UPI as a means of accepting payments without any cost to the merchant. And there is obviously more openness on the merchant to accept digital instead of cash.
I want to know a little about your PayU partnership. So how did the partnership between Bajaj Finserv and PayU enable your various payment use cases? If you could tell me a little about that.
As I mentioned that, there are certain things that we partner on, and these are what I would call PayU as a partner where we have a very deep relationship, and it's on multiple fronts. I think PayU brings on board its expertise as a payment processor, as someone who works on the bill payment side as a COU, is a registered payment aggregator. So they bring the expertise around processing, they bring the expertise around seamless payments, and how then that connects into the financial system as well as the networks. We bring on board the expertise to reach consumers, to deliver front-end technology and to distribute, right? That's our strength.
Yeah.
So I think it's a fairly complementary relationship.
Yeah.
We work across online payments, we work across QR and soundbox related solutions at merchant outlets, and we work across bill payments. And I think if you look at this relationship, what works well is that first of all, partners have to be like-minded. They have to have a reasonably long view of the relationship, right?
Yeah.
Nothing gets kind of solved and nothing gets kind of delivered overnight.
Yeah.
It takes time and we need to work together. So alignment is very important of roles and alignment of objectives is very important. I think sponsorship is very important, which means that we need to sponsor relationships from the top so that it flows into execution teams and all of that, and that's working very well. And I think both partners have a growth-oriented mindset. We need to grow. We need to grow in the right way, which is hopefully profitably for both.
Yeah, absolutely.
And we have a fairly strong alignment in terms of solving problems, because digital businesses are all about, which customer fell off, and what's your success rates, and that's at a very superficial level, but there's a whole bunch of dynamics beneath that.
Got it.
And we need to start solving structurally. So I think we work together in a way to solve problems, to grow together, and have a reasonably long view of the partnership.
Yeah. What suggestions, advice, tips would you have for companies that really want to scale? The Bajaj Finserv scale is very, very big, but any specific suggestions, tips that you would have for companies that want to scale? What do they need to keep in mind as 2 or 3 things?
I'd say 2 things, right?
Yeah.
And 10 years ago, the payment industry was looking very different.
Yeah.
And today it looks very different. And let me tell you what it is.
Yeah.
I think first thing that people need to think about is how can they be different?
Yeah.
You want to do the same thing as the largest payment companies in the country is very difficult. Very difficult because of the stage that we are at. So you need to find what is so different about you in terms of business model.
Got it.
And where is your moat?
Got it.
Right? Where is your strength? And which is why when I say that, we repivot, those are the things where we are trying to find the best ways to find the moat.
Yeah.
Okay?
Very interesting.
So that's one. And second thing which I would say is that, look, if you call yourself a for-profit company, then you must never lose sight of the fact that you need to get to that profit at some point of time.
Got
right?
it. Yeah.
And why that's very important for payments is that structurally it's very difficult to make money in payments, right? Because the revenue pools are thin. And you can argue, and that's the reason the adoption is so high, because there's no fees on many of the payments that consumers make or merchants accept.
Yeah.
But how are you then driving your business through the difference that you can make and the moat that you have towards probably getting to a profit at some point of time? Because you got to be financially sustainable.
Yeah.
If you're for profit, then for profit has to happen sooner than later.
Yeah. Very, very good advice. So if anybody is in the fintech space or the broad payment space and looking at growing a company, you need to have something which is differentiated, which means you need to have a solid moat. On the other side, if you're for profit, you need to have profit in some. You need to have at least visibility on that particular profit as you go along. I think that's.
But I'll just add one other thing, which is a nuance actually. That you can look at this thing as independent profitability, or you can look at this thing as, does it contribute to some other business's profitability?
Yeah,
and that's possible.
Yeah,
right? I'll give you an example. Like banks do payments because they say that, okay, the payment business doesn't make money, but the payment flows come into my current account, and that current account creates a fair amount of accretive profit. Yeah. Right? That's the way to look at it. So sometimes you may look at it in isolation, sometimes you may look at it in a more broader sense.
Got it. Bajaj Finserv has a view on what is happening in India, right? Given your size and scale. Can you share any interesting insights that you have on Indian consumers? Anything which our audience would find interesting?
Indian consumers, I think I'll talk about Indian merchants actually.
Yeah, that'll be well.
They few years ago, before UPI came around the block, merchants generally wanted to accept only cash. Right?
Yeah.
And then a couple of events happened. You had demonetization. That was the first structural event. Nobody's control, I guess.
Yeah.
But it drove the country and the merchants towards accepting digital payments. Then COVID happened. Nobody wanted to pay through physical currency.
Yeah.
Right. And more and more merchants came onto the fold. I think the perfect storm, in the sense, in a good way, is that these two events happened. At the same time, you had a technology or a solution through UPI. And I think, merchants quickly got onto the bandwagon because they found consumers wanting this. It's very difficult to find a demand and supply to come together at the same time. Some people were there at the right time, and they became very big because it was the right moment, which is why people call it the UPI moment, because there were many things coming together at the same time almost magically. And this is the reason why we are here.
Yeah.
But I think it is something which has been spurred by regulations, been spurred by consumer behavior.
Yeah.
And I feel that it's here to stay.
Got it. So I think the insight that I'm also taking from this is that the Indian merchant is pretty flexible and adaptable to his consumer.
He's not only flexible and adaptable, and it's not just about merchants.
Yeah.
You may think that, in the 200th location in India, people are not technology savvy.
Yeah.
But if it helps their business, they will learn technology. They will learn better than you or better than me.
Wow, that's such a good insight. Final question. Where do you see Bajaj Finserv 5 years down the line? Is there anything that you have as an aspiration for Bajaj Finserv or Bajaj Pay as a brand?
I'll
What do you
talk
want
about
happening?
Bajaj Pay.
Yeah.
I mean, I think I would have an aspiration that like I said, that the purpose that we are built for is, can we create engagement for consumers to drive velocity for lending products? Can we create a compelling value proposition for the franchise stores that we operate with, where we offer all our products?
Yeah.
And can we create efficiency for the company overall?
Yeah.
We believe that scale can be achieved by creating a more symbiotic relationship between the payments business
Yeah.
and the core business of the company.
Yeah.
And if we're able to drive this, I believe that we would have created a moat, a differentiation, and hopefully we'll drive a business which has scale and profits as well.
Yeah.
That's probably where I see the business maybe 4 to 5 years down the line.
Nitish, you've done a fantastic job in your role at Bajaj Finserv. Bajaj Finserv, of course, is powered the dreams of so many consumers across India, and is a shining example of a company that can scale up and really serve the country in a great way. I had a very good time talking to you. I hope you had a good time on this particular show, and I think some of the insights that you gave will really help the audience. Thank you very much, Nitish.
Wonderful. Thank you so much.